Starting a business is exciting. It's a journey filled with opportunities and challenges. It's a chance to be your own boss. You make the rules and you set the direction for your venture. One business idea that has gained popularity is money lending. This is where you lend money to people who need it, often for a variety of reasons. They pay you back with interest, which can be a steady source of income. This can be very profitable if managed correctly, but it's important to do it right. Proper planning and risk management are crucial. Many people are attracted to money lending because of its potential. They see it as a way to make passive income, which is highly appealing. Passive income means you earn money without working all the time, giving you more freedom. You need to put in effort up front to set up the business, but once the business is running, it can generate income with less effort. However, don't be fooled. Money lending is not a get-rich-quick scheme. It requires diligence and patience. It takes hard work, knowledge, and careful planning to succeed. You are dealing with people's finances, which is a serious matter. This is a big responsibility that should not be taken lightly. Before you start, learn everything you can about money lending. Educate yourself thoroughly. This essay is a starting point, providing you with the basics. It will give you a basic understanding, but it's just the beginning. Always do your own research. Talk to experts and gather as much information as possible. This will help you make smart decisions and increase your chances of success in the money lending business. Starting a money lending business doesn't have to break the bank. You can start small and grow over time. This is especially true if you're operating online. You might not even need a physical office. One of the first things to consider is legal setup. You'll likely want to form a legal entity, like an LLC. This protects you personally from business liabilities. It's a good idea to consult with a lawyer. They can help you set up the business correctly. Another cost to factor in is compliance. Money lending is heavily regulated. You'll need to make sure you're following all the rules. This might involve hiring a compliance officer or consultant. Don't forget about technology. You'll need a website or platform for people to apply for loans. You might need software to track loans, payments, and other financial information. We can't stress this enough. Legal and compliance are non-negotiable in the money lending business. Skimping here is like playing with fire. You could face hefty fines, lawsuits, or even shut down your business. First and foremost, understand your state and federal laws regarding money lending. These laws cover things like interest rate limits, loan terms, and disclosure requirements. It's a lot to digest, so consult with a lawyer specializing in financial regulations. You'll need airtight contracts. This is crucial. Your loan agreements should be clear, concise, and legally sound. They should outline all the terms of the loan, including interest rates, payment schedules, and consequences of default. Again, a lawyer is your best friend here. Compliance doesn't stop at setup. You'll need ongoing monitoring and adjustments to stay compliant with any new regulations. Think of it as an investment in the longevity of your business. Running a money lending business comes with its share of operating expenses. These are the costs you incur to keep the business running smoothly. One significant expense is collections. Not all borrowers pay back on time, and some may default on their loans. You'll need a strategy for dealing with these situations. This might involve hiring a collection agency or pursuing legal action. Depending on your business model, you might have other expenses. If you choose to have a physical office, you'll have rent, utilities, and office supplies to pay. Even if you operate online, you'll have costs associated with your website, software, and marketing. As your business grows, you might need to hire staff. This could include loan officers, underwriters, customer service representatives, or collections specialists. Salaries and benefits for employees are a major expense to consider. Section 5. Finding your borrowers. Marketing your money lending business. You've got the money, the legal framework, and the team. Now you need borrowers. This is where marketing comes in. It's all about getting the word out about your lending services. Start by identifying your target audience. Are you focusing on individuals with poor credit, small businesses seeking short-term loans? Tailor your marketing efforts to reach the right people. Online advertising can be very effective. Consider using social media platforms, search engine optimization, or even paid advertising to reach potential borrowers. Don't underestimate the power of word-of-mouth marketing. Build relationships with referral partners like financial advisors or credit counselors. Transparency is key in your marketing. Be upfront about your interest rates, fees, and lending criteria. Building trust with your borrowers is essential for long-term success. Section 6. The fine print, loan terms, interest rates, and you. The terms of your loans are the backbone of your business. This includes the interest rates you charge, the repayment schedule, and any fees associated with the loan. Before lending any money, establish clear and concise loan terms. This protects both you and the borrower. Your loan agreement should outline everything in detail, leaving no room for misunderstandings. Interest rates are how you make money as a lender. However, there are legal limits on how much interest you can charge. These limits vary by state, so be sure to research your local laws. Charging excessively high interest rates is not only unethical, but also illegal. Be transparent about any fees associated with the loan. This might include origination fees, late payment fees, or prepayment penalties. Clearly disclose all fees to the borrower up front. Honesty is always the best policy. Section 7. When payments go missing, navigating loan defaults. Loan defaults are an unfortunate reality of the lending business. A default happens when a borrower fails to repay their loan as agreed. Having a solid plan for handling defaults is crucial. Prevention is the best medicine. Thoroughly vetting borrowers before approving loans can significantly reduce the risk of defaults. Check their credit history, employment status, and any other relevant financial information. Despite your best efforts, defaults can still occur. When they do, act quickly and decisively. Contact the borrower to understand their situation. You might be able to work out a payment plan or modify the loan terms. If attempts to resolve the situation amicably fail, you might need to involve a collection agency. Collection agencies specialize in recovering outstanding debts. They will use various methods to collect the money owed to you. Section 8. Backup plans, the importance of security and collateral. Lending money always carries some risk. Whether it's a personal loan, a business loan, or a mortgage, the possibility of the borrower defaulting is always present. Borrowers may default, leaving you with a financial loss. This can be particularly challenging if the loan amount is substantial. This is where security and collateral come in. They provide a layer of protection for lenders, ensuring that there is something to fall back on if the borrower fails to repay the loan. They act as safety nets for lenders. By securing a loan with collateral, lenders can mitigate some of the risks associated with lending. Secured loans are backed by an asset, such as a car, a house, or even savings accounts. These assets serve as collateral, providing assurance to the lender. If the borrower defaults, the lender has the legal right to seize the collateral and sell it to recoup their losses. This process, while sometimes lengthy, helps lenders recover their funds. When offering secured loans, obtain proper documentation. This ensures that the terms of the loan and the collateral are clearly defined and legally binding. This includes a legally binding agreement that outlines the terms of the loan and the collateral being used. Proper documentation is crucial for protecting both parties involved. Make sure you have a clear understanding of the value of the collateral. Accurate valuation helps in determining the appropriate loan amount and reduces the risk of over-lending. This will help you determine the loan amount. Knowing the value of the collateral ensures that the loan is proportionate to the asset's worth. Collateral mitigates risk, but it doesn't eliminate it entirely. Lenders must still be cautious and consider other factors when approving loans. The value of the collateral could decrease, impacting the lender's ability to recover the full loan amount. Additionally, the process of seizing and selling it can be time-consuming and costly. Therefore, while collateral provides security, it is not a foolproof solution. Section 9. Growing your business. Scaling up the right way. Once your money lending business is up and running, you might start thinking about expansion. This is a critical phase where strategic planning becomes essential. Scaling up allows you to lend more money, attract more borrowers, and ultimately increase your profits. However, it's important not to rush the process. A hasty expansion can lead to operational inefficiencies and financial strain. Start by building a strong foundation. This means having robust systems and processes in place that can handle increased volume without compromising on quality. Focus on delivering excellent customer service, establishing a solid reputation, and refining your lending processes. Happy customers are more likely to return and refer others to your business. As your loan portfolio grows, consider leveraging technology to streamline your operations. Modern software solutions can significantly reduce manual work and improve accuracy. Invest in loan management software to automate tasks like loan origination, payment processing, and reporting. This will free up your time to focus on strategic decision-making. Expanding your team is another crucial aspect of scaling. A larger team can handle more clients and provide better service. Hiring experienced professionals such as loan officers, underwriters, and collections specialists can free up your time to focus on strategic growth initiatives. Their expertise can also help mitigate risks. This essay has provided a glimpse into the world of money lending. It's a complex field that requires careful planning and execution. Remember, this is just the tip of the iceberg. There's a wealth of knowledge and experience to be gained. There's much more to learn before you dive in. Take the time to educate yourself thoroughly. Do your homework, seek expert advice, and proceed with caution. The right guidance can make all the difference. The potential rewards can be great, but so are the risks. Approach this journey with a balanced perspective and good luck.